I'd like to introduce David Hall, Managing Director of VinaCapital from Vietnam.
Vietnam is a country with a population of 86 million people. It's a country that has been involved in a number of conflicts over many years, so probably is a late starter in building an economy, and it's now playing catch-up. Saigon, or Ho Chi Minh City in the south, is the commercial capital. However, Hanoi of 3 million in the north is the capital of Vietnam. Vietnam's a very rich country agriculturally. It's the second largest exporter of coffee and rice in the world, and it's also a major exporter of many other foods, manufactured goods, and the like. Looking at the real estate side, tourism is a very large growth area within Vietnam. The hotel business, tourism, golf, leisure. It's an area that's expanding very quickly, particularly with the coastline that Vietnam has. On the real estate side, 86 million people means housing, which means a huge residential sector opportunity, which is in its very early stages of development. Office and the commercial retail sectors are also areas with some growth potential, particularly retail. So retail and residential are probably the two sectors that show the most growth potential going forward.
Mr. Boey, we're starting to see finally the fruits of many years of planning and labour with the completion of parts of the Marina Bay Financial Centre and also the integrated resorts at Sentosa and shortly at Marina Bay. What do you think will be the impact of these new developments on the conventional Singapore property market outside of those areas?
I think definitely the IR has stirred a lot of imagination globally. When the IR was first planned about 3 to 4 years ago, the intention was really to diversify Singapore's tourism base to grow Singapore's economy. And I think it has achieved this when it will be completed this coming year in terms of the employment that it will generate, the spin-offs in terms of the types of services that will be supporting the IR's tourism industry. More than that, I think it will lift Singapore up in terms of its recognition, global recognition, in terms of where it stands globally, in terms of its offerings. But I would like to highlight beyond the IR, Singapore is not just about the two integrated resorts in terms of our tourism offerings, in terms of our economic offerings. We talked about Gardens by the Bay, other projects that we talked about. It's really a more holistic offering that makes Singapore a quality global city.
Well, Mr. Jun Ho Lee, Director of the Real Estate Committee of the European Chamber of Commerce in South Korea.
What we could observe in the last quarter of 2009 that the Korean won has strengthened against the US dollar and the euro. And to give you the most prominent example, the National Pension Service, from last year November on, they have invested very aggressively into Sydney, into London, into Tokyo, and the US market. So at the moment, Korean investors are looking to deploy capital in developed and transparent markets, which are with returns which are higher than in the local market, because in 2009 the Korean transaction market has slightly overheated, even with a negative gearing. So for Europeans who are interested to gain access to Korean capital, I think the key challenge will be to build up relationships. Koreans are very localized. So if you have any chance to visit Korea or to attend any conferences, I think this would be a good platform to meet Koreans. And another aspect is that relationships are very important for Korean companies. So therefore, it's very important to understand the culture in order to build up a good relationship. If I sum up, first of all, I would like to say that the Korean transaction market is a very stable market. Korea has a very efficient tax structure. The REITs Act was actually earlier deployed than in Japan in 2001. And if you are an investor looking for some stable returns, I think Korea is a very good market. And on the other hand, if you are looking for building up relationships with Koreans, then you should definitely tried to find access via going to meetings and other conferences which are held in the region.
Lastly, I'd like to introduce Satoru Yamashita-san, Vice President of Mitsui Fudosan in Japan.
Japan is the second largest economy in the world with a GDP of around $5 trillion. It also has a population base of about 128 million people, and I would like to say that Japan, with this sheer size of the economy, is also very well known as with the stability of the market, the transparency, the legal structure, which is very sufficient for making very core investments. The size is mainly focused in the Greater Tokyo region. The Greater Tokyo region has a population of about 35 million people. It also has the GDP size, which is equivalent to probably the GDP of countries like Italy. It would be larger in terms of GDP than the Russia, for example. So it would be easy to say that if you sort of split the Japanese economy into several regions, each region would be approximately the same size as a European country. A lot of people would also say that Japan sees no growth in its economy. What I would like to point out is the geographical strength of the Japanese, with its location right next to countries such as China. If you took a plane from Tokyo, you could reach countries like in any major city in China. You could reach Hong Kong. They would all be within a 2 to 4 hour flight. In terms of the living standards in Tokyo, Tokyo is one of the most stable economies. It is very safe to live in. You can also note that it is very culturally rich. It has a very good, restaurants. For example, people might know this, but currently Tokyo is the city with the most Michelin-starred restaurants in the whole world, including Paris. Osaka, which is the western center of Japan, also boasts many, many good cultural backgrounds. It has very good restaurants. It is a very, very easy place to live in. And with this advantage of being very close to countries like China, and also with the stability and the richness of its culture, Japan will be benefiting a lot from the future growth of the Asian region, and at the same time it would provide the stability and the transparency of being in Asia.